What's going on, Randy? Welcome in, man. Welcome in, everyone. Welcome in. What's today? Today's Tuesday? Yeah, today's Tuesday. Welcome in, everyone. Welcome in. What up, Roger? Probably get a few more people in here. Probably get started real quick. Today was kind of a lot of alerts, so we'll see if we get through most of these alerts pretty quickly. Give you my pretty much my overview here to start. What I'm expecting out of today's price action. My mic voice is low. That's quite interesting. Someone just give me the okay when I am good, but let me just see if I increase the mic volume real quick. And we should be good. Appreciate that, Roger. Well, welcome in, everyone. Welcome in. What's going on, Gaston? What up, Danny? What's going on, Bance? Elon just pumped Tesla. I'm assuming he probably ended up tweeting something if that's the case. But today was pretty much just felt like a consolidation type of day for me. Uh, I expected it to come at some point. Was it expected today? Not necessarily. Today was just more so. If you notice with Nasdaq FUTU, we dropped about 100 points at the low, pretty much for the day. Uh, I think that was more so around just around after lunchtime that we ended up dropping down to the lowest point of the day, and then we ended up getting the bounce where we needed to. We saw that random bounce out of talk about Roku. Let's just talk about why would I want to talk about Roku? Wait, do I have Roku on the list? All right, just for you, Gaston, I have Roku on the list. But what today just felt like a controlled drop, felt like a controlled consolidation. There wasn't many names that really got that exaggerated drop with Nasdaq. We saw Facebook kind of holding flat to green for most of the day. We also saw Netflix pretty much flat for most of the day. And then we also had that random pop out of Amazon that came out of nowhere and then just creating that pretty much I want to say endless falling wedge right into the end of the day. And then pretty much what I would expect it to take the hit, which has been leading this tech rally for the most part, was Apple and Microsoft. And those are the two that you could say were most red out of what tech we expected tech to really take the downfall for today. So those two, we'll see if those two can really just resurrect that downfall that they had today and continue to resume the Santa rally behind those two names, which pretty much carry the most weight. But other than that, jumping in as I just mentioned Apple, let's dive right into the alerts that went off today real quick, and then I'll pretty much just try to see your comments along the way. I will get to Roku here, so don't worry. But I understand why Roku is hurting. I'll show you on the bigger time frame why it is hurting. I tried to drop a chart, and I actually mentioned it on live when Avery was pretty much looking at that chart, and I'm like, I'm not touching it until it ends up holding a certain point. And I even told you where that entry point was and where your stop loss was. But I'll get to it. So real quick, let's just run through the tickers today for the alerts so we can get those out of the way so you can see where those really targeted and pretty much at what point, maybe something that now you realize you did something wrong now that I'm looking at it. All right. So real quick, looking at those, so I can just get a box real quick. We had the Nemesis that came out pretty early in the day. Those actually came out 11:05 and then 12:24. But the wrap is really set the tone for the morning. That came out just about 10 minutes after the open, and that literally just ripped. Basically, after the fact that it ended up giving us a nice little chop, a nice little push, and then it gave us that beautiful dip and just that massive rip, which I ended up hearing someone say that Apple was actually being talked about on CNBC, and I assume that's really what that ended up being the pretty much the driver for that. But if you see the shaded box area, which I'll change the color so you can see, I'll put it in green. Well, I'll put the entire box in green. You see where that alert came off. So you had an opportunity to basically scalp your 10%. Now, if you got in a bit late, then you ended up getting in that drastic pullback. And that was when NASDAQ pretty much decelerated down to about 60, 70 points down before we ended up getting that news rip out of Apple. And I know that at that point, Avery was pretty much trying to get in, and it ended up being just a ripper. There was literally just no pullback. But what you basically wanted to do was if you saw that defined downtrend that we had from earlier, you would have noticed this was the point where you were looking for that breakout right here out of that little bit of a say defined downtrend. All those wicks pretty much align perfectly on that downtrend, and you broke it right above that area here of 179.74. And so this decision candle, it looked like where you're going to get that little bit of a reversal in between that trend line. That's exactly the candle that you primarily wanted to enter on. That would have been the safe candle to enter, in which that was where you were primarily breaking out of that downtrend. Once you would have got that, you probably would have got right in under that trend line resistance. That would have been your early entry. And if you ended up breaking down below that prior wick, below that 179.35, then that would have been your stop loss, knowing that, okay, the downtrend is still defined. But if that ended up getting a nice continuation, as you saw, that would have been your beautiful move. You would have saw that massive candle. Me personally, I probably would have ended up taking my profits on this massive candle as the premiums pretty much get jacked rather than trying to get it on the reversal back down. I'm not wanting to basically get caught in the reversal back down. Because as you know, once you usually get the spike, the premiums usually end up getting jacked up on the way up on that spike. Once you get that reversal, then the premiums come right back down. So you end up losing. If you end up buying in when the premiums are jacked, and that's why if you usually see when people chase a stock, they end up chasing towards they end up getting an entry at the very top when premiums are so juiced up. And then when you get that pullback, it hurts a lot because you will see your account go down basically 60% within a blink of an eye. So I would have got out on when the premium got juiced on that massive candle before we ended up getting that pullback, and my contracts pretty much would have just lost most of their profits. But that was a beautiful one, and like I said, those Nimbus really just set the tone right after that move. And this was later into the day, around 12:24. So I give you a walkthrough. Yeah, that was right when it actually broke down right in the zone right here. We saw that little bit of a breakdown. This was the point of where you wanted to see us get a nice little continuation right back to the upside, but it ended up breaking right back down. So that was where the Nimbus came in. If you ended up getting in on the Nimbus here at this price point, that was about 180.22. So yeah, right at basically before that little wick right here, if you see my cursor, pretty much at the top of the body, that was where you probably would have got hit pretty hard on that if you ended up doing it. But one thing to notice was that the first one was actually this week expiration. They were still banging the table on 180s, which were basically at the money. And the other one was next week expiration. So if it was me, I probably would have waited. Would wait for like a pattern, some better setup than getting in blindly on this Nimbus. Because again, if you blindly got in on that Nimbus at 11:05, you probably got slaughtered. All right, and I mean that's just reality right there. Because everyone's trying to buy that up, expecting the continuation out of that massive pop. Because you're gonna have buyers that are pretty much just left holding the bag off of that massive wick, expecting a bigger continuation. So buyers tried to step in. That's what ended up triggering that Nimbus, and you would have took the downfall for that. All right. So me personally, I would have waited for it to form a better pattern. Wait for it to maybe end up breaking this current level, which seemed to be that support resistance type level here. If it ended up breaking, as you see, you broke down here, tried to recover, getting that full flush, and you ended up retesting that same level as a resistance. So until it would have reclaimed this level 180.62, I wouldn't have gotten into that Nimbus. Okay, so that's what I pretty much wanted to show you where you probably would have ended up not taking that Nimbus right away blindly. I would have personally waited for it to reclaim this level and break over back again over 180.62, and that would have been the point where I would have looked for a continuation. All right. So that was Apple. I mean, there was it was either you ended up catching that massive pump off of CNBC and you got in early, or you ended up trying to chase it and you got burned on it. It was either way, unless you just watched from the sideline. All right, but there was no easy way around playing that. Okay. Next one is Amazon, and this one has just been. It literally feels. If you heard me yesterday, it feels like Facebook from last week, where it's just toying with your emotions. That's literally what it feels like right now. But the buying pressure is literally still there. It's still intact. We'll see what it does tomorrow. It just feels like it's an everyday watcher until this supposed Santa Claus rally is pretty much over. But we basically want to see this get back and reclaim over that 34.40. Right now, another key level before the 34.40 level is 34.28. I would probably look at that level. I do have a small position of swinging overnight. We'll see what she does. I believe she's up about $8 after hours. As we try pretty much just get a nice little recovery here in hope of continuing the rally. But 34.28, that's really the big level for me as well. So I'll decide at that point, depending upon the volume, the price action, I'll pretty much decide if I want to take my profits at 34.28, or if I end up pushing to see if we reclaim 34.40 tomorrow and we get that continuation towards the upside. So I'm hoping it's a bright green day tomorrow. Whether other names participate like Microsoft and Apple that really have just been carrying this rally, I'm hoping that maybe it's Amazon that really takes over. And as you saw, I did have this falling wedge. I pretty much posted it in the Dapper and Cigarette thread. And I was like, at what point is this falling wedge literally just going to stop? Because that literally just went on for the entire day after that late morning push at 11 o'clock. It literally just kept going and kept going. So I got in right around this level, somewhere right around 34.07 or so. I got in. I saw that nice little breakout. I contemplated taking profits. I closed, and I couldn't compel myself because if this ends up ripping $100, I'm probably gonna hate myself. So just knowing my risk factor, knowing pretty much what that risk is gonna be tomorrow, because this can definitely eat premium, and you've heard me say that a number of times. We'll see what she does tomorrow. If I don't get the gap up I like or the market conditions I like, I'll cut it and be out of it right away at market open. But we definitely want to see it get over 34.28, reclaim 34.40, and then I'm pretty much targeting 3500 on this move. But definitely a beautiful move. You saw those nimbuses come in, and maybe this would have been those that you pretty much wanted to take blindly. But also the fact that both of them were the same week expiration this week, and they also had a pretty nice premium on both of them. So 234K, 102K. You basically had 300 plus K on just weeklies for out of the money calls. That tells you a lot rather than having an Apple at the money call for a weekly. That was a 180 call that you got on that Nimbus versus a far out of the money call on Amazon, which is double Nimbus. So I would have had a lot more confidence if I wasn't looking at the chart, taking a call that was out of the money the same week rather than following the Apple one, which was at the money, if you get the difference that I'm saying. All right. So that was the very big difference. You got basically would have got in. That was around 10:50 this morning. So 10:50 this morning, you got in basically right on this chop, and you would have got that last leg up on that push, and you would have got your quick 10-15% out of that last leg towards the upside. And again, if you usually hear me always say, you try to set a low ball order, try to set a limit order, especially on names like Amazon, Tesla, and Google, and those types of names. So that would have definitely been a beautiful one. Gaston, you're funny. Nah, it's not my birthday, by the way. I went to a birthday for a family member. Probably shouldn't. Actually did mention it in the thread. But again, the Nimbus here, you would have saw that this was out of the money, same week expiration. That was basically the big key out of that. All right, and then you had the Rapids that also came in a little bit earlier. You had the double Rapids for that matter. That was even further out of the money early in the morning. That was another, and that's why I say the buyers are literally just sitting there out of the money. So if you notice, if they didn't end up taking their profits on this little micro pump here, then they're likely still sitting out there. And I'm sure there's even more sitting at that 3,500 strike that are out there. So we'll see what that ends up doing. But they ended up getting on that around 34.16 was the lowest point. 34.16 would have put you right in the middle of the spike, rather. 34.16. Yeah, that puts you right into the zone right here when you ended up getting a little bit of a dip. So you had a dip opportunity on that rapid, and you had that beautiful follow through. So Amazon ended up giving you the perfect 10-15% you want to say on both of those type of alerts, the rapids and the Nimbus today. It's just if you're looking for the bigger move, yes, you ended up enduring a little bit of pain trying to hold, and that massive kill candle that I would say right here, that was literally a horrible candle from 34.41 down to 34.15. That was a horrible candle. That literally just destroyed you right there if you got in towards the top area here. And that's what I say, if you're looking for the bigger move, candles and moves like this will literally destroy your premiums, especially if you're far out of the money, like those 3,500 calls. So just something to be cautious of. Moving on so we can get through this fairly quickly because I know it's quite a lot and I don't want to bore you guys to death out of this. But this was actually one from yesterday. Just wanted to show you a follow through here on Peloton from yesterday's action. This one was actually down about $1.58 today, so you had a beautiful follow through. It's not in the money just yet, so I would expect to either get a little bit more of a downside action here. They actually did give themselves quite a bit of time. We still have about 3 weeks of time on this one. So let's see what they end up doing. Izzy, I'm literally about 5 seconds from just blocking you right off the YouTube feed. I'm just messing with you. No, I'm not 45 by the way. So beautiful one here. If you heard me yesterday, I mentioned that they gave themselves a lot of time, and it was quite a bit of premium that they put on this one. But overall, it's pretty much it is paying. We'll see if it continues to pay more than what I would say. Looks like about 40. Could probably got easy about 30-40% out of that move today. So it seemed pretty beautiful. Let's see if we get the continuation. Just wanted to remind you guys of that one. Another one also looking at was ARK, and I believe I was looking at this one on a larger time frame. Let me just zoom out real quick. Yeah, I was. I was looking at this on a larger time frame. So looking at ARK here pretty much, we saw those puts that came in today. Looking at that one, they came at 11:03, and yeah, I could have went into today's action, but let's see. 11:03 would have put us. Yeah, I'm gonna have to go into today's action. Let's see real quick. One sec. Let's zoom in. I remember I actually called on live that this actually ended up paying because I actually last looked at it and it was up. But looking into today's action, they got it around 97. Yeah, I can even tell you right now. They got it at 97.13 and the Imagine at 95.63. So it's down $2 from where they ended up getting in. And that doesn't even, that was looking at the low of the day basically. So that was a beautiful one that ended up hitting as well. But what you're looking at on this one is that they went on the weekly. It wasn't as much, but you treat it like a rapid, so you would have got your clean 10% out of this one. If it was more so a Nimbus, like I kind of referenced to the Apple being that it was at the money, I would have been a bit more cautious. But considering that this one ended up coming through as a rapid, I would have ended up definitely taking this one. And as you see, it was a quick 10% out of this one. All right. Moving on, looking also at FUTU. This is another one and more so a longer term play. There was no price action today that dictated anything out of this alert here, but I just wanted to bring it to your attention to show you basically two things. One thing is that they ended up going pretty far out of the money. If you notice, they hit the 50 strike. Current price is at 41, so it's about a $9 out of the money strike. And then the second thing is that they ended up giving themselves a lot of time. So they have about close to almost 3 months basically to hold this strikes. So I do want to see how this ends up playing out. I do also like the fact that the TFC score is greater than 60. That's usually what I prefer, that I ended up liking. So we'll see how this ends up playing out. I would prefer to see something a little bit more attractive off of the chart itself. There's nothing compelling looking at the chart that says, you know what, I want to buy in at this particular spot right now and hold until February. But the fact that I want to wait and see if there's any kind of reversal pattern that ends up forming so that I can end up actually playing it off the pattern rather than just pretty much just catching a knife in my estimation. All right. And then if Gaston's pretty much still here, this is what I pretty much looked at. And I'm not going to go into the smaller time frame because it would be pretty much pointless. But two things I will say here, and this is if you're still holding. There's two confidence out of this one. One is that they're holding basically same week expiration. If they are still holding this, which I would assume they are, it's same week expiration. And then the second thing is that they went pretty far out of the money. Current price was 238 at the time, and it's 250 strike that they hit. And then the other thing also, well, the third thing is that the TFC score as well. So that was just a beautiful thing to see the TFC score follow online basically with all the other indicators, which I usually end up liking. I just didn't like the pattern that this one was setting up. If the pattern on this was looking way more better, then I would have definitely taken this one pretty much blindly as I heard Avery talking about it. And I know that he was looking for that setup. I pretty much said that it needed to end up holding over 240. You take your entry over that 240 and some change at that point that it was, that I ended up calling it out on live, and you use the 240 level as your stop loss. If you're holding below 240, then yes, you endured quite a bit of pain. That's basically what I ended up saying. You're basically playing it above 240. That was the breakout point that you wanted to see it hold and end up breaking on the larger time frame, the daily, breaking this larger downtrend resistance. So as you see, all that price action that you had today, you're still basically in that downtrend resistance. You ended up just rejecting right off of it for what, the fourth time now nearly? One, two. You could say maybe this is the third time intermediate, and then here's your fourth time testing that resistance. So we'll end up seeing if this just continues to be a consolidation going into tomorrow. I would anticipate that this is definitely going to get the breakout by the end of the week, just like I expect that the same thing for Amazon. But who knows what's going to end up happening, because just like Amazon has so many buyers out of the money, just like Roku, this buyer's out of the money, and it's same week expiration. Those are the kind of plays that you end up liking. It's just that the price action is not correlating just yet. So it's gonna be a little bit of a patience, but that's why you usually want to obey by a stop loss. If you ended up getting in and holding for most of the day, yeah, you endured quite a bit of pain. So sorry to hear that. If you guys ended up holding that for most of the day, we'll see. Hopefully, we get a nice little gap up, nice bright green day tomorrow, because that will definitely help this pretty much push. And I won't be surprised if you end up getting a $20 day out of this, and that'll literally put you right into that 250 strike. So just be patient, is what I will say. All right. But if you are holding pretty much greater than a 40% stop loss right now, then that's where you need to analyze pretty much your trading habits and knowing where your stop loss is. If you have a big appetite for risk, then I guess continue holding, because I'll wish you the best. All right. But moving on real quick, let's get on with the other ones. Looking at eBay, this one was a little bit of a head scratcher to me. And I did see after the fact, I realized that it ended up breaking the uptrend. I'm just trying to position it real quick. But as you see, it was a Nimbus alert. They did go just pretty much at the money is what I would say. It's about $1 out of the money here. That's at the money for me. They hit an 88% score on this one. I do love that TFC score. The one thing that's pretty much a drawback for me entering right away is how far the expiration is. That's the other drawback. Just like you saw with the FUTU, they gave themselves pretty much almost about 3 months of time on this. But what I did notice here on the 4 hours, if you notice, we had a defined trendline support. We ended up breaking it. You got a beautiful retest, and that's what they're playing off of. So you know after the retest of breaking a trend, after you get that retest, you're gonna get that continuation of the downtrend. So that's what they're looking to play. I will look to see if I get any kind of scalp on this tomorrow if it ends up playing. I just don't see myself holding this until February 18th if it's really gonna take that long to play out. But I will keep a watch on it. Definitely keep an eye on this one. Maybe set an alert on it if it breaks down below a certain point. I would love to see it break below that low here, because I know that would pretty much accelerate that downside pressure. Once you break that 63.54 level here, that will definitely accelerate that downside pressure. So I'll keep an eye on this one. I'll likely more so day trade it rather than swing it. But I do like this one. That confidence score, and also being that it ended up breaking that uptrend, that definitely gives me that confidence when your TA pretty much aligns with the alert. Not more so like the FUTU, which is pretty much just a shot in the dark where FUTU is still in a defined downtrend, and they gave themselves about 2 months with a call out. I don't see a point to just getting into that one blindly, so I am going to wait on that one just a bit. All right. Just four more here real quick so we can get into those. Looking at MDB and this one, I know that Mamba ended up taking a position on this one. I just kind of wanted to give you guys my take on this one, as I usually like my TA to align with the alerts. I do like the call here. I remember that me and Dapper were actually looking at this on live when we had this inverted head and shoulders action. And once we ended up getting right here, this was on the 20th last week. I ended up seeing this little downtrend action. I knew it was going to end up breaking. That's when you ended up having that massive candle on the 21st. I knew this was going to end up just pushing. What I didn't expect was getting an unusual at this particular spot, because although this is bullish and you see that they did go basically at the money, they also did go same week expiration, and it does have just nearly a 60% TFC score. My only concern here is that we end up getting a retest, possibly, of the neckline. That's my only trepidation here on getting into MDB. So I do want to wait for a better fluidity out of this one tomorrow. Hopefully, maybe a nice gap up, and this will be a nice little trend type day trade that I'll be looking at tomorrow. But the only thing that concerns me about swinging this one, getting in today, was it is possible that you end up getting a quick move to the downside here, retest the neckline before you get that continuation to the upside. But granted, they did do this week expiration that is rather aggressive, so it could be end up being just a quick drop off Maybe a morning where it's just a slightly red, then ends up bringing it right down, and it gets bought right back up, and we see a beautiful push. So that's my analysis on this one. I just don't like the spot where you're kind of floating between either a continuation right here or retesting the neckline as you normally retest prior resistance. All right. Another one was BNTX. This one was also one of those biotechs. I was actually looking at NVAX, if you guys probably heard me on live, and there was quite a bit of flow out of the money on NVAX, pretty much going out for next month. But this one ended up hitting also for next month for January 21st. So they gave themselves quite a bit of time. They got about 3 weeks in time. They did go, was this out of the money? Yeah, they went pretty far out of the money. 255 current price at the time was 248. The only thing here is that I would prefer to see this end up breaking the downtrend resistance before I end up getting in here blindly. This is where I usually say I want to see some kind of reversal, defined reversal breakout basically before I end up just pretty much catching a knife. Because to me, this is still a defined downtrend that I'm basically catching a knife right now, and it could potentially go lower even tomorrow and the days to come. So I want to end up seeing this get right back over this downtrend resistance. Once we break over that, I want to say about 247, 248 level, then we should be all clear to end up getting it, entering a position, and hopefully this swing ends up paying out, as we know that pretty much COVID is really going to be related to all these vaccine stocks, as this pretty much just continues to get worse as you see so many surrounding people just getting more sick and sick. All right. Moving on, other one was Carvana. I wasn't too fond of this one, but I did send alert. This is another one that has a defined downtrend resistance, as you see the TA here. We want to see this end up getting a little bit of a breakout from the defined downtrend. Once we get over about 237, 238 on Carvana here, then I would preferably like to enter this trade as well in this unusual. They did go out of the money on this one, and they also did give themselves about 3 weeks of time on this one as well. So something to keep in mind. But as you notice, these what maybe 2, 3 here between FUTU, BNTX, and also FUTU, BNTX, and Carvana here, they're all still in defined downtrends. It's basically like a knife catch that you're basically doing out of these alerts. So that's why you always want to look at your TA basically after looking at the alert. All right. And then just the last one here, right before the end of the day, this one came out as well, looking at TNA. This one, I was a little bit more confused about whether my TA, on my TA, basically, if I wanted to see this potentially as an inverted head and shoulders, which would prolong the breakout on this, or if this would just retest that resistance to get a full reversal. And the reason why I say that is because, as you see, that neckline for the inverted head and shoulders aligns very much so on all those wicks. So that does give me an indication that this is a defined neckline. You have a left inverted shoulder, left inverted head, and you're basically going to end up dropping, which is going to form your right inverted shoulder. So that's my trepidation here on this TNA play. So I'm a little bit cautious on this one as well. They did go out of the money, and they gave themselves 2 months of time on this one. So I am a little bit cautious on it. I would prefer to wait to see if it ends up breaking over my resistance line here. We get that break over that 88 mark, then I'll feel a lot more comfortable on this full reversal back to the upside and completing the gap fill. All right. But that was the last one to cover. Those of you that pretty much joined me in late, you probably heard me earlier in the morning, or you saw me during the day looking at Amazon. I'm holding a small position on that one. We'll see what she does tomorrow. But today really just felt like a consolidation type of day. Nasdaq futures down 100 and something points, and just a beautiful recovery. Uh, it really just felt like a defined downtrend today, and a lot of names that we expected to pretty much run for the Santa rally really didn't get that much hit, other than what I would say is Apple and Microsoft that got most of the hit. The Facebook, the Netflix, the Amazon, the Tesla, you saw all those names pretty much hold up relatively well. Pretty much, if they weren't green for the most part, they were just holding flat. So we'll see what those end up doing. I know that futures were looking fairly nice. We're not pretty much doing that much. Nasdaq futures are about up 24 points. So we'll see what they end up doing. Someone said, and I actually remember that JKS. Let me take a look at it. I haven't even looked at that one at all, to be honest with you. I didn't even look at the Super Fortuna on this one, but if I'm looking at this, I see a little bit of a defined downtrend. This is where I see a defined downtrend. And if I'm looking at this, yeah, you have a nice little pennant type action here, a little wedge action. Let me actually take a look at the alert real quick. Yo, Izzy, go away. Let me see real quick. See what that alert was real quick. Hold on one sec. One sec, guys. Let me see. What was the JKS alert? Alright, so it just said bullish activity. Alright, so it didn't say anything in particular. Okay, so it was beta. Alright, I mean, what I can end up doing here is what I would anticipate that Super Fortuna's alerting is that you're going to end up getting that move towards the resistance. That's what I would end up playing it towards. I don't mind getting the entry here for those of you that ended up entering on that. Of course, you do have that little bit of a gap fill down here below, which you do need to be cautious about. But you would end up playing this right into the resistance here, getting a move towards that 46.70 mark, and that'll be where you want to see it end up getting a nice little breakout here for a continuation to the upside. If you can't end up breaking over that 47 mark, then yes, that'll be the part where you end up rejecting. So just be cautious, treat it like a Nimbus for that matter, in my opinion. Look for the quick 10-15%, take your money, be out, look for the next trade. All right, you see how many alerts go off on a daily basis. Don't try to hold the one looking for that 40 to 100% move. If you can get that quick 10-15% move with the amount of alerts that go off for the day, and you probably hear us even saying our own plays individually on live, there's way too many plays to just pretty much hold one looking for 1,000%. All right, so that'll probably be my message for tonight for you guys. But I'm just hoping that we see a nice little green day today. Well, tomorrow rather. We see a nice gap up tomorrow. And today was just pretty much just a consolidation day, which I've pretty much just been repeating myself saying. All right. But we'll see what ends up happening tomorrow. Those of you holding Roku, I wish you guys the best of luck. I am holding Amazon, so I probably say the same thing for myself. Because as I pretty much mentioned, there's buyers that are sitting out of the money on both of those names, Roku and Amazon. It's just a matter of when the TA aligns with that breakout for those buyers that are pretty much just sitting out there along with ourselves. All right. But let's see. Let's see. If hopefully the Santa rally continues. I would hope that it's not the end here. But we'll see tomorrow morning. We'll give you the analysis, the rundown, what we see tomorrow morning, whether we get a gap up, gap down, or we pretty much just stay sideways. All right, guys. But I'll call it a night here. We'll wrap it up. You guys have a good night, and I will see you guys on live tomorrow morning. All right.